Glenn, thank you so much for being on the show. It's great to have you.
Good to be here.
Why don't you start with telling a little bit about yourself? Where are you from? How'd you get started in the industry?
Yeah, sure. So my story is I grew up in Mississippi on a farm, very humble beginnings. And when I was 16, I had an opportunity to get a position at a local Holiday Inn as a busboy. And I'd never had a job before, and it was an opportunity to make some money that I never had growing up, really. And so I took that job, and from there, my story's probably not unsimilar to many. You get into this industry, and you stay in the industry, or a lot of us do. So, I finished high school working at that Holiday Inn, progressed from busboy to dining room waiter to banquet captain. And so by the time I graduated, I was a banquet captain, and that gave me the income to be able to send myself to college. And so I went to college at what was then Memphis State, now the University of Memphis. Got an accounting degree, although I realized very soon after getting my degree that was a mistake. I didn't enjoy accounting, and so I did that for 1 year. All of this, I'm still with Holiday Inn. So Holiday Inn at the time was headquartered in Memphis, Tennessee, and so that's where I went to school, college. And so I said, okay, I don't want to be an accountant. What do I want to do here? And I had the operations experience that I just mentioned at the hotel level. And so I had this accounting background, so I went into financial planning with Holiday Inn. So sort of a blend, it helped to have the operating background, but it also helped to have the accounting degree. And from there, was just blessed to be able to progress into a number of different positions with Holiday Inn. And some may not be aware, Holiday Inn launched the Embassy Suites brand. Mm-hmm. They also launched the Hampton Inn brand and the Homewood Suites brand. And so I ended up working with all three of those brands as I progressed in my career. As I left Holiday Inn and worked with Embassy Suites, it was much more pure financial planning, more at the corporate level, but rolling up all of the hotels that we were managing and looking at the financial results of those and forecasting, budgeting, all of that type thing. From there, I went to work. Holiday, as I mentioned, launched the Homewood Suites brand, an extended stay brand. And so I was able to join as that brand was launched. So I got some great experience as we launched the Homewood Suites brand. And then we launched Homewood in 1988. And so we were in rolled right into a recession. We had sold 200 franchises, and yet 3 years later we had 16 hotels open, 8 of those being franchised hotels. So obviously the start was slower than we had hoped, and so the overhead organizations of Homewood were combined with Hampton Inn, and I was one of the few from the Homewood side that made the transition over to Hampton. Most of us at Homewood were let go because Hampton was a more established brand. They had a larger organization, and it was easier for them to absorb Homewood than Homewood to absorb Hampton. But I made the transition over, began to support the franchise system of Homewood Suites, and got some exposure to Hampton Inn while I was there too. In the early 90s, I left Memphis and went to work for a gentleman named John Q. Hammonds. John Q. Was an early Holiday Inn franchisor. Opened the 75th Holiday Inn in, I believe, 1958, which was certainly before my time. When I joined John in 1993, he had about 35 hotels, most of which were Holiday Inn hotels. And he had started to dabble with some other brands, one of which was Embassy Suites. And so I had some experience with Embassy, but I really went to work for John, and my effort there was to recapitalize his business. And so it was a big step, from what I had been doing at Homewood as I joined him. One of those things, you look back on, and probably if you had known what you were getting into, you wouldn't have done it. You would have said, whoa, that's over my head. I can't swim in that water. But I did, and we performed. It was a great ride. I learned a tremendous amount. And in short, while I was with John Q. Hammonds, we did a couple of large bond offerings, because this is 1993. So again, we're coming out of the recession, and traditional banks were not making hospitality loans at all. Certainly not for new build hotels, but not even for existing cash flowing hotels. And so we talked to a tremendous number of traditional banks, but ultimately wound up in New York, and interestingly enough, worked with Lehman Brothers, which of course is no longer. But we worked with Lehman Brothers, and we did a high yield, $300 million high yield debt offering, which allowed us to refinance a good amount of debt that Mr. Hammonds had coming due on hotels, and we needed to repay about $200 million of debt, so we did that, but obviously that left us with $100 million of additional proceeds, and we took that and got John Q. back into the development business, because he couldn't get financing anywhere, so he couldn't develop, and that was certainly his love. So we started developing hotels again, and within a year we did another $90 million bond offering, similar situation, refinancing debt on a smaller number of hotels, but it still brought in additional proceeds above the amount we were refinancing, and we just plowed that into development as well. And so it was a great time for me from 1993 to 1998 to really learn about how hotels get financed, and frankly, a whole new level of development. John Q. was a big believer in full-service hotels with meeting space. I had not really worked much in the meeting space arena, a little bit at Holiday Inn, but not significantly. And so I gained a great appreciation for what that meeting space could do as a demand generator for a hotel when properly done. And then ultimately we did an IPO for John Q., took his company public.
Oh, wow.
We sold 27% of his company, and that raised at that time about $100 million in 1994, I believe it was, and may have been 90, I think it was 94. But anyway, raised about $100 million. And again, we just plowed that into new development. And so we were developing hotels in the 200 to 400 room range, full service. And of the 20 hotels we developed during the 5 years I was with John, only one of those was a Holiday Inn. John was a big believer in atrium hotels. He had these wonderful hotels built around atriums, but they carried a Holiday Inn flag. And we talked about it, and he was convinced, you're right, we should go to a more upscale brand that is in keeping with the product that we're developing. And so we did a tremendous number of Embassy suites within that 20 hotels that we developed. But we also did Sheraton, Marriott. We did a couple of Homewood suites. We did a couple of Hampton Inns, which obviously I had some experience and exposure to those. And so it was a great ride. And then
all franchised?
Pardon?
All franchised?
Yes. Yes, that's a great question, Adam. So I had moved, when I joined John in 1993, I had moved from being on the franchisor side of the table with those four brands I mentioned, Holiday, Hampton, Embassy, Homewood, whichever brand I was with at the time, to being on the franchisor side of the table. And so the experience I'd had with those four brands on the franchisor side was certainly an asset to me as I moved over on the franchisee side, and we negotiated a lot of franchise agreements, obviously to get 20 hotels developed. Actually we did a couple of independents within that 20. Not all were franchised. But I don't want to drag this out too much, but to finish kind of where I am, I left John in 1998, again, Springfield, Missouri, and came to Nashville, Tennessee, and I came to work for Gaylord Entertainment. And Gaylord Entertainment owned the Opryland Hotel in Nashville, the largest non-gaming hotel in the U.S., about 2,900 guest rooms and about 600,000 square feet of meeting and exhibit space. So I've been working with John where we had hotels with some of them considerable meeting space. 100,000 square feet, I think, was the largest that we worked with at John's company. Most, though, were in the 20 to 30,000 range in terms of meeting space. And so I come here to Nashville, which is where I am still today, and start working with Gaylord, and it's yet another big leap for me in terms of career growth, learning really the mega convention hotel business. So certainly the work I'd done with John in Springfield was a great platform, but these mega convention beasts are indeed another animal, if you will.
They are another animal. There's no doubt.
But I came here not to. I did oversee the Gaylord Entertainment Opryland Hotel here in Nashville, but I came here to get Gaylord hotels developed in other markets. At that time, that was the only convention hotel Gaylord had, and so I, along with others, it's not just me, but we built a development team because there was no development team here. And we went out and, in short, developed a couple of hotels while I was with Gaylord. The Gaylord Palms in the Orlando market, which is a 1,400 room, at that time, a 1,400 room hotel with about 400,000 square feet of meeting and exhibit space. And then secondly, we also developed the Gaylord Texan, which is in Grapevine, Texas, but Dallas-Fort Worth market. It's about 5 minutes north of DFW Airport. A 1,500 room hotel, again, another 400,000 square feet of meeting and exhibit space. And it was just a blast, a great time for me. And then I'll pause. I'm doing a lot of talking, but I left Gaylord and co-founded Wellengood, which is what I'm doing today.
And that was roughly when?
We founded, technically we founded Senate Hospitality in 2002, and just a few weeks ago we changed the name to Wellengood Partners. So we've been operating for about 19 years.
You're running your own shop now after working for all these other companies. You got your own place.
Yes, and it's quite different running your own shop than doing all the other things I did. But
Tell me about it.
I've had a blast doing it. Yeah.
So, can you give everybody a sense of the structure at Wellengood? Do you own hotels? Do you manage hotels? Do you do both? Do you do neither?
We do both. We founded Wellengood in 2002, as I mentioned, again, interestingly enough, coming off of a recession that 9/11 had created. And the gentleman that I co-founded the company with, he and I at the time really looked back to that big prior recession, that we went through late 80s, early 90s, and said, we're going to have the same thing happen. We're going to have a lot of hotels that banks take back from the owners, and those banks are going to say, we need somebody to operate these assets because we know banking, we don't know hotels. And so we thought that we would be able to pick up management contracts as a result. However, what I think we missed, Adam, was the banks had wised up since that last time, and they realized we don't want hotels on our balance sheet, and we need to do everything we can to keep them off our balance sheet. So banks were much more willing, there in the early 2000s, coming off of 9/11, they were much more willing to restructure debt, and I think it was smart of them because they realized it was a recession created by acts of terrorism, and the economy would likely bounce back, and so it didn't make sense to take these hotels, these assets from the owners. And so, so that kind of changed our approach, Adam. So these banks weren't having hotels that they were taking back, which meant we didn't have the management opportunity we thought we would have. And so we said, okay, well, what do we know? And we said, we know development. And what we realized, while I was at John Q. Hammond's, while I was at Gaylord, what I realized was a lot of architects have people come to them that want to develop a hotel but don't know how to do that. Perhaps they are a multifamily developer, office developer. They're in the real estate business developing, so they know real estate development, but they don't know hotels. They go to an architect, and many of those developers will know right away, I need expertise on my team. I need hospitality expertise. Sometimes not. Sometimes they get into it with their architect. The architect begins to ask questions. Okay, let's talk about the development program. What do you want this hotel to be? Well, I don't know, 200-room hotel. Okay, is this limited service or full service? And you start getting into the basic questions of what will a hotel be that you develop as you go through that development programming stage, and they struggle. And so the architect says, you need hospitality experience on your team. And so another type of client, by the way, would be someone who wants to develop a hotel who has no real estate development experience. And oftentimes those individuals get a little further down the road before they realize they need the hospitality expertise than those that are already in real estate development, but just not the hospitality segment. So anyway, all of that to say, Adam, we've done a lot of business with a lot of architects. We've crossed paths with a lot of people over the years. And so people, architects would say, okay, Adam, you're not able to answer our basic questions here about what you want to develop, but we know a guy. Why don't you call Senate Hospitality, now Wellengood Partners? Here's Glenn Malone's contact information. Give him a call, and I think he can help you out. And so that's what we started doing. We started providing development services for a fee to third parties, things went well. We've done a tremendous amount of that. Along the way, we not crossed paths. We really got involved in a project in Memphis, Tennessee, similar to what I just described to you. A gentleman wanted to develop a hotel, went to a local architect, couldn't answer those basic questions for the architect so the architect could do their work, and the architect referred that individual to Wellengood. And so we came online and started working on that project, and this was in 2004, so the company was only in existence for about 2 years. And we started working for this gentleman, and this scenario I'm about to describe is not unusual. We got maybe 3 or 4 months into the assignment, and this gentleman said, I don't need to do this. I don't know the hotel business. It's a little bit bigger effort than I realized it was going to be, so I'm not going to do this. Excuse me. And that's certainly understandable. Again, we have that quite a bit in our business. We run into that quite a bit. But what this gentleman said was interesting. He said, you gentlemen have spent a lot of time in Memphis. I'd come from Memphis, right? That's where I went to school, worked the Holiday Inn there. So why don't you develop the hotel? And so my partner at the time, Dave Jones, and I were driving back to Nashville, and we just started talking about it. And we said, we're making it okay. We're providing development services to third parties, but it probably helps our development business if we develop a hotel ourselves. It's one thing to say, Adam, I've developed hotels at Gaylord Entertainment, mega convention hotels. I've been a part of developing hotels at John Q. Hammond's hotels. Everything from limited service to full service 400-room hotels with a lot of meeting space. I've been a part of developing Homewood Suites. When we launched that brand, we developed 8 company-owned hotels to kind of jumpstart the franchising effort. It's another thing to do that yourself. And it's the same process, but when you take personal capital risk, you look at things a lot differently and maybe a little more closely. But it causes you to really appreciate how important each step of the development process is when it's your capital at risk. And so Dave and I talked about it driving back to Nashville and said, let's see if we can do this. Let's see if we can tackle this. This gentleman we were working for, by the way, wanted us to develop for him a 100-room independent hotel. We told him that we thought the hotel needed to be larger and it needed a franchise. There certainly are opportunities where independent hotels make sense, but in this case we felt like the project needed a flag behind it that would also be a significant demand generator. And so, again, I don't want to take too long in the description, Adam, but basically what happened was this started in 2004, and in late 2005 we closed on the capitalization for the development of a 203-room Westin hotel, at that time under the Starwood umbrella. Of course, now it's under the Marriott umbrella. We started construction in early 2006, opened in April of 2007, and we've owned and operated that hotel since.
Wow. What was the process of going and getting capital to develop or build that hotel?
Yeah. Well, oftentimes in hotel development, the place to start on the debt side is with local banks because they are in the market. They understand the market because they operate there. And obviously you need to find a lender that is also willing to lend into the hospitality space. But so that's what we did here. We went to a local bank at that time called First Tennessee Bank. Now it's First Horizon Bank. And they provided us with the first mortgage for the hotel. We also realized that we needed, it still left a pretty big gap of equity that we needed to provide, and we knew that all of that equity could not come from us alone. We weren't deep enough. And so we began to explore how to round out the rest of the capitalization. Just to give you some specifics, at that time in 2006 when we started construction, or in 2005 when we were working on the financing, it was a $40 million project budget, $40 million all in, on a ground lease, by the way, owned by the city of Memphis. And so, which complicates financing, by the way. Ground leases are not as easy to finance as fee simple land is. But thankfully we had some exposure of financing new developments on ground leases, and so we had a sense of what we needed to tackle there. But we had a $23 million first mortgage loan on a $40 million project, leaving us with a $17 million gap. And so we became aware of a new program which we had never worked in before called New Market Tax Credits. It's a federal program that provides income tax credits for development of projects in low-income census tracts. Even though we believed this was a great site within a great market, it happened to be in a low-income census tract, so we qualified for new market tax credits. The short of that discussion, Adam, is it was incredibly complicated. We did one of the first new market tax credit deals ever done because it was early on in this new benefit that the federal government was promoting. But that provided about $3 million of the capitalization that we needed on the project. And again, I won't spend the time here to go through all the details, but it was a good add to the project that allowed us to bring some low cost capital into the project that enhanced the returns on the remaining equity we still needed to raise. The other thing we had going on there, Adam, was we needed a debt guarantor. First Tennessee Bank at that time, now First Horizon, was offering us a loan, but it was recourse debt. And so we needed a guarantor. We needed someone to stand behind that loan. And again, we were not deep enough to do that. So we found a local Memphian who had a significant net worth and was specifically interested in seeing downtown Memphis developed well. And particularly this site, he had an interest in seeing this site developed well, and we approached him, and he agreed to guarantee the debt for a fee. And so we negotiated that agreement, and at the same time, we negotiated with him what effectively was a second mortgage on the hotel as well of a little over $6 million. So to round out where we are now, we've got a $23 million first mortgage loan. We've got a $6 million second mortgage getting us to 29. We've got about $3 million of net proceeds coming in from this new market tax credits transaction, getting us to about $32 million, leaving us with an $8 million equity gap. And that was a lot more doable than where we had started with just a $23 million first mortgage and a $17 million equity need. And so we went out to individual investors, and we raised $8 million along with our partnership, and that rounded out the $40 million capital stack.
And every step along the way could have just killed that deal.
Exactly. Absolutely.
Right.
And really, Adam, every step along the way, while again we had been exposed to it, it was a different type of exposure this time, being the sponsor developer of the project, and taking capital risk.
Yeah. And sorry, I'm not sure if you mentioned it. Did it end up? Oh, it was a Weston that you developed, right? So do you think that having that flag, well, had you guaranteed that it was going to be a Weston at that point? Had you signed an agreement with them?
We did. We early on, before we even secured the first mortgage financing commitment, we went to Starwood. We actually approached another brand and spoke with them about one of their upscale assets. I won't name them. I don't want to put any bad light on them, but they said, we don't think Memphis is a market for that. And so we said, well, we think it is. And so then we approached Starwood, and Starwood, frankly, had a similar response. They looked at Memphis and said, we don't see a Weston in Memphis. And with them, we said, I tell you what if we fly you to Memphis and show you what we see and see if you see what we see? And they agreed, and we had a great meeting in Memphis, and that gentleman, a guy named Ed Luzarder with Starwood at the time, left saying, you're right, Memphis is a Weston town, and I think could do very well here. And so we were able to secure the Weston franchise. So
you were able to, so the stars aligned, this happened. Was it, and then what was the process then in getting your second property?
Well, we actually don't have a second property. We still manage one hotel today. Again, that hotel opened in 2007, and we've managed it since it opened. So 14 years later, we still manage that hotel. We've had a tremendous ride with that hotel. But we really, as I started into that part of the Wellengood story, we developed that hotel saying, this will be good to do this for our development business, side of our business, because when an Adam approaches us and says, I'm thinking about getting someone involved to help me develop a hotel, we now are able to say, we appreciate we appreciate what you're about to take on, Adam. We've done it ourselves, not just at Gaylord, not just at John Q. Hammond's or other places. We've done it personally, so we know what you're about to embark on. And so we really turned our focus back to our development services, which we still provide to this day, and has been a significant part of our company up until now, while all the time operating this hotel in Memphis, Tennessee, having good success there, but going through the ups and downs of hotel ownership and management. And, there's some different perspectives as an owner versus a manager. In this case, we're on both sides of that table. We are the management company, but we're also members of the general partner entity that oversees the ownership of the hotel. And so it's been a great ride. We, just to fast forward, and you may have more questions about the Westin, but just real quick. So about 18 months ago, we said, let's do more projects like the Westin. Let's take capital risk again. And let's look to develop some hotels where we will manage them after they're developed, as opposed to being just a fee developer providing services in the development effort. And so that's what we've embarked on now. And that, we're not a major developer. It's not like we're going to develop 20 hotels like we did in 5 years when I was John Q. Hammond's. But if we can do a hotel a year, that'd be great for us. And then we'll keep doing our on the side, not on the side, but the other portion of our business efforts, providing development services to third parties, will continue to do that as well.
Do you think that, looking ahead, I know you haven't developed it yet, but do you think it'll be easier to get your second one as opposed to getting the first, or is the second always harder? I
think it'll be. I don't know if easier is the word. We're certainly more knowledgeable going into it. Because it is different when you have to put together the capitalization stack as an individual or as a group of individuals, partners, as opposed to working for a company that has significant cash on its balance sheet, has significant numbers of assets. And so when the lender says, I need a guarantee, oh, no problem, we have a company here that's worth $500 million, and it will be the guarantor. Okay, we see that company, that's substantial, we'll accept that guarantor. So we're more knowledgeable. I won't say that it will be easier, but maybe easier in the sense that we know better what we're tackling.
Yeah. You know what you need to line up ahead of time, rather than getting blindsided by, oh, now we got to go find someone who's worth, or has a company worth $500 million
right.
that wants to do business with us. There are so many directions that I want to take this conversation, but I'll try to stick to, be very pointed. Before jumping off of this boat here that we're talking about, though, that what you explained about thinking that there was a business opportunity in the early 2000s during the downturn of banks taking over hotels, and we could then be a partner with the bank and take them over. That's very much a situation, all things, being, put out on the table like that. For me personally, that was how the company that I started at the start of the pandemic was thinking that this was going to be an opportunity here. And that's just not really come together. There's extend and pretend and restructuring, and banks don't want to take these hotels onto their balance sheets. I mean, there's a lot of similarities from what's going on today with what you're explaining with how your company started back in the early 2000s. Are you seeing? Is that from someone who's sort of been there and experienced what you thought it was going to be? You pivoted, and now you've got this company, and now we're going through this situation again, although it may be a little more prolonged than it was back then. Is the landscape similar, or is the perspective from lenders and developers different today than it was back then?
Back then, being, say, in the last recession?
Yeah.
Yes, I think it is different. I mean, it's our last recession was a more typical recession. We're in in a cyclical economy, if you will, generally speaking, in this country, where we have times of growth and we have times of recession. And the last recession was one that was more of a typical economic recession. It did have some particular drivers, I guess, like any recession, but it wasn't like 9/11 where you had an event. It wasn't like the recession we went through in 2020 and early 2021, where it was health. There was a health event. There was a pandemic that occurred that was the catalyst behind that recession. So certainly different in that regard. I do think that it forced lenders to look at things differently, because sometimes, especially when a bank has a non-performing asset, they're going to look at the entire situation and say, why is this asset not performing? And in a non-recession environment, oftentimes the conclusion is, it could be poor management. It could be not the proper positioning within the market where the hotel's operating. It could be a number of different things. And so a bank might say to the owner, we don't agree with where you are with this asset for whatever reason, the operation, positioning, what have you, and so we're foreclosing. And in that scenario, they're going to turn around then and sell that asset to someone that probably has a different view on that asset. Certainly, they have to have some different view, or it's not going to perform any differently. So they operate it better, or they position it differently. They do something that makes the asset perform. Frankly, one of the things that could make it perform is the fact that the bank ends up owning the hotel for the debt that they loaned into it. So they have the ability to sell that hotel at a much lower cost basis than the owner could have, right? He had his full cost basis in it, and it makes it harder to make it work. So I think I'm not sure if I'm answering your question, Adam, but it's different from those perspectives. This recession being created by the COVID virus, I think banks looked at it and they said, we can come and take Adam's hotel and give it to Glenn, but what's Glenn going to do different than Adam's been doing? Adam's not successful because demand dried up, pure and simple. It just dried up. People stopped traveling, whether they were leisure travelers, whether they were business travelers, whether they were meeting attendees, they stopped traveling. And I think banks realized that and said, it does this, generally speaking, it doesn't do us any good to foreclose on assets. Certainly there were assets that were foreclosed upon, but not in the great wave that we saw, in the early 90s in that recession, where all of these assets ended up in the Resolution Trust Corporation, RTC, owned by the federal government, and the federal government was selling these hotels off for pennies on the dollars. They bought them from banks at the note level that the bank had on it, but then the federal government turned around and sold it for far less than they had paid the bank for the note. Why? Because they're the federal government. They have that ability. Right. So yeah. But anyway, I think this one's different, probably as every recession is in some regard.
They're all a little different. Yeah. I know you've got a hard stop here soon, so I'll wrap up with a quick question. You mentioned something earlier about having, and I think this is very interesting. You've got two perspectives. You've got the owner perspective and the manager perspective on a hotel. And I don't think we need to, everybody knows what we've been through. A lot of markets in the country are still going through it right now. But is there anything that the past 18 or so months has reinforced for you that you thought was true, but now you know is true as an owner? And then is it different as a manager?
I think I thought that generally from everything you and I've been talking about here, I think I thought that lenders were looking at things differently now than they did, say, 30 years ago in the recession of the early 90s that I mentioned. And I think this confirmed it. It didn't make it easy. We had an asset like most hotel owners. We had an asset in downtown Memphis that was not performing. And so it forced us to sit down and work with the lender to determine what we were going to do. There's a whole nother discussion there. We have CMBS debt. It's a It's a commercial mortgage-backed security loan, a CMBS, commercial mortgage-backed security loan on the Westin in Memphis. And that brings in a different level or a greater level of inflexibility on the lender's part with regard to doing any kind of workout with the owner than would, say, a traditional bank like we had originally secured the debt on the hotel development with First Horizon. First Horizon is able to do some things that a loan that's in a commercial mortgage-backed security transaction, you don't have the same flexibility. And so, but even with that said, I think it confirmed what I had always thought, that lenders look at things differently now, and they're willing to be, every lender's different, but they were willing to sit down with us and talk about the situation, and we were able to find a way through it. I'm not sure if that answered your question. And what was the rest of your question?
Yeah, though the rest of it is effectively the same question as a manager, though. I mean, you're still responsible for the day-to-day operation of the hotel. There's, you've got employees that are looking to you to kind of, provide for themselves. Like there's a lot at play here. Kind of the same thing. Did you think something was true that was reinforced through the pandemic as we come out of it when you're dealing with the people on the ground who execute the vision?
Yeah, I think we have a tremendous team at the hotel, and they have been they've just been great to work with all the way through COVID. We had to downsize the organization because we just didn't have revenue coming in, but we kept key team members, and those key team members have been just phenomenal working with us through this process. It's not been easy. It's not been easy for us. It's not been easy for the team at the hotel each day, but we've worked through that together. I think there's differences in views. I'm on the one hand, I'm on the ownership side, and I'm looking at this asset and saying, how much additional risk do I want to take, right? And then over on the management side, I'm saying to my partners, we've got a great asset here. We can't let it go away. I mean, and something you mentioned, talking about things that you thought were true that were confirmed. Here's one that I thought was true that was not confirmed. In fact, I was incorrect in my thinking.
You're reading my mind. That was my follow-up question.
Yeah. So we go into the COVID in March of 2020, and our business just dries up. And I'm saying to my partners, this is temporary. 90 days this will be over with. And we just got to hang with this. And we've been reasonable as owners. We keep capital in the business, and we knew that we had capital to carry us for some time, and so I just felt like we would pop right out of this, and but the government shutdown lasted longer than we thought, and even after the government shutdown ended, I don't think I had at all a good understanding or appreciation for the way corporations would look at this virus in terms of their people and basically say, Adam, we still don't want you traveling as our employee. We don't think it's safe for you to be out there, So while you might be willing to travel, now many people weren't willing to travel, but while you might be willing to travel, your company was saying, no, we don't want you on the road. And so that went much longer than I personally anticipated as well. So it's been a much more difficult road than I anticipated it would be.
Yeah. Is there anything that you've changed your mind or your perspective on that's been colored by this whole pandemic situation?
I think I have a lot of different feelings about that answer. Some good, some not so good. I think my mind has been changed in terms of our government a little bit. I think government, not unlike me, I think government didn't necessarily respond in the right way in 2020 and even in 2021. And that's had direct impacts to our business, negative impacts. I don't believe in retrospect that a shutdown of the economy was the right thing to do in 2020. I think many have come to that conclusion. But I was sitting at home working from home myself. I wasn't coming into this office. And I thought that was a good thing. I thought, yeah, this will knock out the virus. It won't be able to spread, and we'll get through this quickly. And that was not a good assumption, and government made that same assumption. I guess maybe I looked to government and thought they knew better than maybe they do. And their government's made up of us. We are the government, right? People. Mm-hmm. And so I think that perspective has changed. On the flip side, and I've got mixed emotions on this too, but government stepped in to help at the same time. One of the things that got the West and Memphis through to where we are today is the Paycheck Protection Program, PPP. And it's been the case for, I think, many hotel owners. So that's something where government stepped in and helped us. And it's been a big help. It wasn't the only answer. I mean, we still had to, as owners, we had to put capital into the business to get to where we are today. But it was a help for sure. So in some cases, I look at the situation and say, responses have been incorrect, not good. In other situations, I look at it and say that the responses have certainly been helpful.
Yeah. Yeah, it just seems like there's no right answer, right? There's no easy answer.
Yeah, and you realize
it's very nuanced.
Yeah, you realize you have to give grace, because we think we know what to do, and many times we don't.
Yeah,
and I'm speaking of me personally, local government, federal government, what have you.
Yeah. Glenn, I know you got to hop off here, so I'll wrap the show here. But man, I could talk to you forever.
Well, thank you.
This
I've
stuff.
Enjoyed it.
I think this is great. If anybody wants to learn more about you or Wellengood Partners, what's a good place for them to go?
Wellengood.com. Check out our website, and if you're interested in talking with me further and you're listening to this podcast, you can find contact information there to reach out to me.
Sounds good. I'll link to everything in the show notes and some other things that we talked about on the show today. Glenn, again, thanks for being on the show. This was fantastic.
Thank you, Adam.